All right, everybody, let's do a brief audio and visual check. Hopefully the buffer and the bugs have worked themselves out of YouTube. Um, let's wait and do that. How about you, Coach Jay? You guys can see I have Coach Jay with us. It is Wednesday night, as always. Let's do an audio and mic
Sounds
check.
sounds good. Looks good over here, Dakota. Hopefully it does for everyone else in the chat as well. And thank you.
I still see the buffer every once in a while. That being said, let's just get into this. And as always, in the YouTube chat, there is our Top Step risk disclosure. Everything that we talk about is for educational purposes only. We say that all the time, but for whatever reason, I still see traders think that they could either fade or follow us. And it's just, I mean, internet's going to be the internet, right, Coach Jay?
Internet is going to do what the internet does.
Exactly.
We're a part of it. We appreciate it. We
Yeah.
appreciate the views and the likes. Just make sure you hit the like button.
That being said, how was your day, Coach?
I mean, we were on fast markets together. I think we both called out the market really well. Maybe didn't execute it so well. There was pretty much an A+ setup for me that's set up in the S&Ps and the NASDAQ, but I've just been kind of out of pocket lately. Called it really well, just didn't trade it. And then after that, did not trade at all. After fast markets kind of got off the charts, went outside. It was 2 degrees outside, so I went back in and just kind of stayed off the charts for a little bit. It was nice not having to make a decision for the day, just getting a day off, load management like the NBA players do. But I'm feeling good now, back into it and ready to trade for today.
It's load management. Load management. That's something I need to do. We were talking before we started slow markets about my boxing and how worn out I've been getting at failure to load management.
Yep.
It's the same in trading. I get a lot of questions. I get so many questions. I'm sure you do as well about traders where they say, I look at the market so like all day long. How do I stop? How do I prevent myself from looking at the markets? And what advice do you give them? I know there's a lot of great tools on Topstep X for that, but I don't know if there's any other like psychological or mental advice that you like would be able to help.
I think it really is just listen to yourself, right? How many times do we say, hey, I'm not feeling it today, and then we try to force decisions anyway? Really listen to yourself.
Mm-hmm.
I think anytime I've said that prior to a session, right, I'm not really feeling it, and I try to force trades, they're usually bad decisions, and then I'm not happy with, right? Part of our job is knowing when we're in flow with the markets and reading it really well. And if you're not, it's better to stay out to conserve some money. Now, if that's something that's consistently happening all the time, maybe we need to look at how much risk you're putting behind your trades, right? Are you over leveraged and now every decision is causing anxiety? That's a little different. But take a breather, take a step away from the market, understand that the markets are still going to be here and they're going to move whether you're in them or not. And maybe just watch for a couple of days and get back to it. And appreciate something off the charts, right? There's a lot of work that gets done here, especially if you're early in your journey, right? Where traders feel like I have to stay at the charts 24/7 in order to figure this game out. And at some point, you need to give yourself time away from the charts.
Time away from the charts. I know whenever I take a day off, I know I did that Tuesday or throughout the weekend. A lot of times I don't even think about the markets. I get a lot of conversation with traders. They're like, well, that's what you do for your full-time job. Like that's one of your main sources of income is trading. Don't you just review your trades for the week? Do you like analyze statistics? Do you like go through the market? How much time do you spend into it? And my answer really does surprise them. I just say no, I don't. I've done it for so long. It's very repetitive, and the way that I allow myself. I mean, I only take 1, 2, 3, at most 5 trades a day. There's not much to
Right.
review, right?
Right. You know what you did.
Yeah, and so I don't have that extended like 3 or 4 hours over the weekend to review the markets, review the statistics, to do that. But one could argue, and I'm going to be honest, is I've absolutely loved doing this for Topstep because this has allowed me to kind of do just that, and help traders answer questions while I'm answering questions, while I'm talking to traders, while I'm doing this class. It does help me go through the trades and the markets. And so I am kind of just staying up to date on the markets morning, night, and day because of this. And I've really enjoyed it. And it doesn't feel like work. It's not exhausting. It's not repetitive. And I've enjoyed every minute of it.
Yeah, it's great. I love doing what we do on Fast Markets today, right? We were still calling out trades, giving ideas to the house account. It's fun, right? It's fun analyzing the markets, and I wouldn't be here every day if it wasn't.
Exactly. Let's get to it. Your charts are showing. If you want to start it off, Coach Jay, on the NASDAQ, I am looking at the NASDAQ. I'll follow along with you, and I'll try and get to some questions. We've been getting some really good questions. So let's go to it. What's your thought process on the NASDAQ? You have a top-down view, or how do you start?
Yeah, so I am looking at a daily chart right now, because the last FOMC meeting that we had, which was on December 18th, that candle, we just closed above 50% of that candle today. The high of the candle is 22,376. And I'm looking at a couple of things here. So we have, if I anchor a VWAP to that candle, we've gotten pretty extended from it on the daily chart. So I'm reading, how the market responds here. We have 4 up days in a row in the NASDAQ. I heard David Green say it today. He wouldn't be surprised at a little bit of a pullback over the next 2 days. And just reading this, where price is kind of getting extended from volume from this FOMC day and from the the yearly open. I'm bullish, but I'm a little hesitant to continue to buy here if we start to see some hesitation around these 22,000s in the NASDAQ. Not a market that I may, I'm just putting on blind shorts in, but maybe looking for a pullback to continue to buy here.
Right. I'm actually, I'm looking at this market right now. Let me switch it to my charts. And as you're going through, I agree 100%. Looking at that higher time frame, looking at that daily, we had that huge rally, and sure enough, we got to that zone that I was looking for quite a while up here at the 70s and 80s, and we got that pullback. And yeah, just like I've been referring to, we did get quite a bit of a pullback with that tweet, or that whatever, that the tariff conversation, and then we just kind of springboarded off that. And that shot us up here to above 22,000. We are now below 22,000. We're at 21,009, the mid 900s. And I wouldn't be surprised to see some consolidation. Do we talk about news? I'm sure I know next week's going to be a big one, but there's not really too dramatic news. I mean, we do have the jobless claims, right? That could cause some volatility, but not too dramatic of news outside of that. PMI maybe.
Yeah, I think jobless claims, that's every Thursday, and then PMI on Friday. But outside of that, not seeing too much either on the news front. But the climate that we're in, there's news at the drop of any tweet.
Trump speaks tomorrow. Okay, I think all eyes are on the new presidency, right? Where they're kind of, it's like a magnifying glass, where everything that the president does, the first 6 months or a period of time while there's a new president, is just over exaggerated. I think maybe that's what we've seen on, what was it, Monday or Tuesday, and everything's going to be put under a microscope, and moves are going to be reacting. It's going to be very fast, and it's going to be interesting how it plays out. I mean, Trump is very vocal when it comes to that, and brings the volatility, and I love volatility. As traders, we love volatility, and so that can 100%. Be a good thing for us as traders. Like, we had that huge volatility spike, straight down, straight back up. We're now trading here, but I agree, maybe we look for some type of a pullback. As I start to zoom in on a 1 hour chart, the question is, where do we pull back? What would be a reasonable pullback level? Where I look for areas that used to be support, right? Well, we have an area of support right here at basically lower 900s. I could argue to say There was resistance there as well. This is kind of a target I was looking for. I think this was what, the other day that we just blew through that. Was that? Yeah, that was this morning. That was last night. Last night I was talking about that, and we hit it, and we kept going, and we're there again. So I wouldn't be surprised if we see some type of pullback to these lower 900s. Maybe see some type of reversal, consolidation, and then we look to continue. The other question is this the pullback that we're seeing right now? I mean, we could take a look.
Great question.
And we can say that there's like a bit of a wick right there, right at these mid 900s, 940s. And then we're looking at how the market's reacting. This is a decent pullback, to be honest. I mean, this is 150 points. There's times where the market rallies. 100 points is as deep as a pullback can get. And then the next thing I look at is measured moves, right? What would be a measured move? I mean, it's kind of hard because we got that crazy news event, and I'm not really seeing anything to measure too much off of. I mean, we did get this. This was something else. This move, and we still have room to the downside, which is going to be putting us around like 890s, lower 900s. It's a lot harder to measure these moves, Coach Jay, since we've seen all this volatility with the change in presidency. Right. This is not a consistent market. This is not an easy market by any means. And yeah, maybe we are seeing that. If I zoom into a 5-minute, I'll kind of show you what I was referring to. We had that opening range in the New York session, right? And there was a lot of consolidation on the New York session to start off at the open. Well, if we take a look at where we're at now, I mean, this is interesting to me, right? Where we had this as some type of support and resistance. We broke out. We rallied for most of the day. We pulled back, and we pulled back to this level. Is this a buyable level? That's what I am thinking right now, is kind of my thought process. And it looks like we did get, I mean, a little bit of a reversal tonight, or around those 950s. We got us down as 940s, and we 943. Yeah, we did kind of make a higher low. Like, is this a higher low being made? Well, if we can break through this level, these 960s, and push back up to these 70s, maybe. And until then, it's still a downtrend, and we are still, I mean, maybe we just continue to sell off and look for that level down where it was support today, actually. That's where the support was today, now that I'm thinking about it, where we found the support in the New York session.
Those low 900s.
Yeah, and it happened 5 minutes before the market opened. I mean, it happened fast. Good price location doesn't last long.
Let me ask you a question. If you were to get long here, where it looks like we're turning, where would your stop be?
Yeah, exactly. So if it's an overnight slow markets trade, and let's say if I'm going to look to get in at a buy stop, right? I don't want to maybe not get in now, but just get in if we decide to break out. Then I would want my stop to be somewhere below that. But looking at that, it's going to be over 70 points of risk, which is okay. Depending on your size, I'd have to drop down to micros, and I'd need at least a 1-to-1. And that would come back and test the highs. And I just don't like that trade setup. It could still be valid. I don't like to target because this is on the daily chart. I mean, we could definitely have more of a pullback after such a long rally. I would much rather look for something where I could get a tighter stop loss and then a tighter take profit. So maybe something like this to get a bounce back up to the 22,000 level, that nice round number. So something like that. Maybe there's an argument to be made. I could use just a buy limit order if we can sell off down here towards these lower 900s and look for a better risk reward. So I'm thinking on the long side. Are you seeing anything on the short side here in the NASDAQ?
So on a shorter time frame, and I'm talking about a 30-minute chart, since we've opened, right, since Globex opened at 5 p.m. Central Time, it is a little bit of a short kind of playing out here, where we have that first 30-minute opening range. VWAP is getting ready to leave that range. but I'm thinking the same thing, right? If I take a short here, how much room is there to the downside before we hit a level I think we should be turning around? And there's about
Mm-hmm.
30 to 50 points, right? Right around those low 900s, like you said. But yeah, this is a decent medium time frame short. But the way I'm thinking about it, is this a move to get in the longer time frame trend, right? So if I took a short, it's more of a see profit, take profit trade than looking for 200 points.
Right. Yeah. Nope. I like that. Let's move over to crude oil. That's been an interesting market. I know you've been talking a little bit about that. How are you seeing crude? We've been selling off.
Yeah, I want to sell any pops in crude. Right now, we're kind of low of the range, so I wouldn't short here. But any pull-ups up to 76, somewhere in that area, I'm looking to sell for now,
Okay.
unless
Pull ups
something
up.
changes in this pattern. The last 5 days or so, we've been in this downtrend under the 200 moving average on the 30-minute chart. We can see it every time we pull up near or above this purple line here, which is the 50 moving average.
Okay.
We then get a sell-off. So I'm looking for that. Helps me limit risk and looking to take a short from there.
Okay. Yeah. I agree with you. I mean, if you take a look at, you're kind of looking at that 30-minute, but if you take a look at the daily, let me pull that up on,
Yep.
you pull it up if you don't mind, Coach Jay. I mean, it's been a market where it looks like, from a technical standpoint, like it's bullish, right? We broke out from this like multiple month consolidation, and we're getting this pullback, and it's looking very, very bullish. And now, this is a big debate, right? Do fundamentals play any role in your trading? And it's
Right.
the battle between fundamentals versus technicals versus like what news is coming out and so forth. Well, there is definitely an argument to be made here in crude, is that the technicals might show that this could be a pullback on a daily and a buyable pullback. There is
Yep.
that aspect of a new presidency and a change in what's actually going on from the fundamentals. And so this would be something where I would be a lot more cautious in buying a pullback. If there was no news, if there was nothing like that, then I would look at this chart and say, great, maybe we could pull back to 74, 75, see some type of reversal, and then continue. But yeah, you could see back in, what was it, right before November, we've had a nice rally, and that immediately got shut down. So maybe
Yep.
we see a pullback down to $70 a barrel. I wouldn't be surprised if we see $70 a barrel.
We do on this daily chart, looking at it, we have 5 down days in a row, and I'm just kind of scanning back. I don't know the last time we've seen something like that in crude oil, so maybe we do get a little bit of a relief before we continue to this downside. But we're almost $5 off that high in the last couple of days, about 5%. So
Yeah.
I'd be leaning to the short side, but again, how much room is there to the downside before we see a bounce? And of course, news can change anything. A headline can change anything in crude oil in a second. We saw that today, actually, while we were on fast markets. There was, I don't know what it was, but there was just, you see the spike in volume right here on a 3-minute chart. This is at 9:45 Central Time. This is a 70-tick candle, and it happened in about a second. I don't know what it was a reaction to, but this can happen in crude. So whatever market you're trading, make sure you have a stop.
Always, Coach Jay. We seen that today during the New York session, where it just could randomly sell off 40 points in just faster than your stop loss could get triggered. Right? It's just so fast sometimes, and
Yep.
yeah, there's a good message right there in the chat, and let me find where it was. Is slow markets are typically very, very slow. I can't find that message, but I kind of give you the summary of it. Trump likes to tweet at night, right? So I'm curious to see is if there's going to be more volatility for the slow markets in the upcoming period or the foreseeable future, or not. I'm curious on how that's going to play out. I would love that volatility. I welcome it to
Yeah.
have this market just randomly jump up a couple hundred points or sell off a couple hundred points, and then be able to trade some of that aftermath and bring the volatility in the New York session. And that's all we can ask for as traders, regardless of how we get that volatility. We want it. That's for sure.
Yeah, we want markets to move. So we'll welcome it. Like we were talking about today during fast markets, right? It's like, this is kind of boring. Just seeing price action go back and forth. I don't think either one of us are range traders. So when markets are moving, they present opportunities. It's what we're looking for.
Yeah. Yep. I'm going to go switch to my charts. We'll take a look at the Nikkei. I'm over here watching the Nikkei. Going to be honest, I was looking for a little bit of a short trade. I didn't quite get it. But let me go through the analysis. What I'm thinking, what my thoughts are, is, similar to the NASDAQ. Take a look. It's quite the big rally here in the Nikkei from that sell-off. We're up, 3.3%, almost 3.4%, and we got a little bit of a pullback. And so I kind of zoom out and I look at, okay, where are we at? Can we get a deeper pullback than this, or are we going to get more of continuation to the long side? Well, I wouldn't be surprised if we do get a rally up here, to these 40,300s. If we do get a rally up into this zone, I'm going to be tempted to take a short. I am, right? Like, this is the pattern. We get up into this zone, and then there's been some great selling opportunities. Next, I look at where we're at right now, and tonight, is there a decent selling opportunity? Well, maybe, right? Maybe, because we see also some spikes and some resistance. Starting to see in this same level. It's a big zone. This is a really big zone here in the Nikkei, basically from 40,000 to 40,400, or basically this entire zone. So maybe there is something. I typically do not look at correlation, right? But obviously, if the U.S. markets rally, sometimes, more often than not, the Asian markets can rally as well. And so I'm continuing to zoom in, and then we got this nice pullback, and then I'm thinking, well, guess where we bought? Guess where we started to bounce? We started to bounce right there, right? That was resistance. We broke through. Resistance, sure enough, became support again. So there was an opportunity to buy this dip at the 39,700s. And then we take a look and we extend that. And look, sometimes technicals are so beautiful like this. Look at it, bounced once or bounced twice. It became resistance again, and then it just bounced. It just bounced right there. So sometimes technicals are such a nice tool. And yeah, there's maybe a long opportunity. Maybe there was a few opportunities here in the Nikkei that we're seeing some movement in. But most of the movement, I think, has already passed. We're kind of in the middle. I would like to see us break out. Maybe we can make a run up to 40,200s tonight. Tomorrow morning, maybe there's a short opportunity. Or even later. I know Nikkei can move really fast.
I'm seeing someone in the chat saying Bank of Japan interest rates in an hour, but I'm not seeing that on my calendar.
I do see there is tomorrow night, January 23rd, there is a rate decision, a rate statement, an outlook report, and a press conference. So maybe that's what they are referring to. It is tomorrow night. Yes. Yeah, today's the 22nd. So it's tomorrow.
Yep, today's the 22nd. Okay, it's tomorrow. Got you.
Mm-hmm. Anything else? I know you don't trade the Nikkei, but from your perspective,
it's in an uptrend. Maybe a little bit of hesitation at this 40,000 even level for a pullback, but not something I trade often. If I'm looking at since the Asian session opened, it's saying it is a buy right now. It's saying it's a buy right now, but I don't trade the Nikkei often or look at it much. I wonder how much price action we'll see with that news coming out tomorrow. Also, right? Do we see a consolidation day? Does that happen in the Nikkei, right? Day before a big rate decision, do you see consolidation?
For a big news event in any market, you can see consolidation, Jay. Yep. I haven't paid attention too much. I just know I don't really like to be in a trade when an
And
interest rate decision is
yeah,
coming out or a big news event like that's going to be coming out. It's not good to be in a trade.
right.
Yeah, that's got me wondering. I have not paid much attention to that in the Nikkei. I know that's typically how it is for the NASDAQ, right? Have you
Right,
seen?
right.
What about in other markets?
Yeah, I mean, even if you look at the agriculture markets, right, when the WASDE report comes out on a Friday, uh, Thursdays are usually pretty slow price action, right? Pretty consolidated, and then the news comes out, and then the market can continue trading. So I think with some of those big decisions, it makes sense that we're not seeing very many directional trades the day prior. Maybe people are already positioned or whatever it is, but yeah, I feel like a rate decision is a pretty big one. All right, we pay attention to it.
Yeah, exactly. Gold. I haven't been trading gold very much, so I'm gonna leave this one to you. I know you were looking at a trade earlier during the New York session on fast markets.
Yeah, I was looking with my eyes closed. I was looking to short gold.
Okay.
Was looking to
Okay.
short gold, and maybe it's playing out a little better right now. We can see this 30-minute opening range on the 30-minute chart, where volume has left this range, and it does look heavy to the downside. We can see, we tested into this range a couple of times. We keep rejecting. If I'm looking for a short in gold, is down to 2750. So there's
Okay.
about 10 points left in this trade. If it does continue to go, right now is just not great trade location, right? I'd like a short somewhere near 2764, maybe 2763.
Shorts. Man, I have such a hard time shorting gold. I've been watching this trend, higher highs and higher lows, but
Yep.
I am starting to see what you're seeing, right? You have those, and it's yeah. I would be looking to buy those mid 40s, mid to upper 40s.
Yeah. So, and that would be my target. Ultimately, gold is in an
Okay.
uptrend over the past couple of days. So that would be where I'm getting out. Maybe flipping long, but the long also might be at the low of this consolidation that we've had over the past day and a half, right? This 2760 area.
Right.
Oh,
Yeah. It's consolidated. Yeah. It's looking heavy. It's looking like
it's
it
funny.
could break, right?
I
It's
talked to
looking like it
Coach
could
Paul
break.
about it. He looked at the chart. He's like, "This looks like I would never trade this,
I
just because
haven't
of the
traded it.
consolidation that we're in."
I went through those few months, right, of where we see a spike in volatility, right at what was it, 8 p.m. Central, correct? We were seeing a spike in volatility at 8 p.m. Central. Was doing the demonstration. I did that for a while. You guys could watch the recordings. I don't know the exact dates, but I was doing that for a good 2, 3, 4 months. And then it kind of turned into a really messy market, and I kind of stayed away from it. I talk about basic technicals on it, but I haven't really placed a gold trade for quite some time.
I was very happy to not take that short today. I was pretty much at the low of the range.
It was looking heavy, man, and I was okay with it from the technicals, and sometimes I struggle with hesitation during my class. I was looking
That
for
you
a
should have taken.
short. Yeah, I was looking for a short right here, just above 920.
Nikkei.
Yeah, I have the Nikkei up. I'm just hesitation in the Nikkei. I don't know what it is. There's been a few times where I've just hesitated. There, if you believe this one, what was it? Let's see. Everybody in chat probably remembers this. We were down here, 38.1. I think we were at like 160, and yeah, if we zoom all the way out, it looks even worse. We were right down here, and I was like, this might be just a stop run, and I was really debating buying 200. Yeah, this was last week. I was like, buy it, and I talked myself out of it, and I was too hesitant. And look at that rally we got off of that, and Yeah, yeah, that was something else. This was one of those like woulda, coulda, shoulda trades that you just have to forget about. And I've been really hesitant on the Nikkei. I think it's because of some of the crazy moves I've been seeing, and of course, getting beat up so often
Right.
last week from that. So a little bit of PTSD, I guess.
Protect yourself.
Hmm.
Protect yourself. You
Yeah,
touch the
there's
stove and it's
always.
hot, you're just like, oh, and maybe we wait till it cools down a little bit. But uh, also at the same time, if you see a trade that fits your setup, right, that's why you just have to jump in, right? That's why I was kind of upset about my trading this morning because there were just clean setups that I wasn't taking.
Hmm.
Um, and it's just like if you say it, it's good enough to take it, and it's not always going to be right. I think a lot of times we try to be right, and we're it was like you're protecting something to
Hmm.
not be wrong, but it's going to happen anyway, right? Whether you choose it or not. So I'd rather be wrong in trades that I like.
Exactly. Yes. Yes. Nope. 100%. Sometimes the most easiest and obvious trades are the better trades. The better trades. That's for sure. Anyway, we went through that rapid fire. Let's get to some questions, everybody. Now that we have Coach Jay, we can get to some questions. And then the last 30 minutes of class, we could do some trader statistics. If you would like us to review your statistics, go ahead and submit them in the Topstep Discord. In the Topstep Discord, you can see a Dakota channel, right? Coach Dakota, my channel. Submit your statistics there. In Topstep X, you have a nice option to share your statistics on the top left hand side. You can see your stats. In those stats on the top right hand side, you can share. It's a link. Go ahead and share your statistics. So at the end of this session, we can review them. And now remember, the more details, the better it is for us to review them, and the better feedback we can give. And I'll sit here and I'll watch the Nikkei sell off. And let's get to some of these questions. There was a lot of good questions yesterday, Coach Jay, and I'm hoping for more of the same tonight.
Let's go away. That's why we're here.
Exactly. I'll answer a couple of these first ones coming in. Why does the Nikkei move the way it does instead of solid, consistent movements? So the reason why you guys see the Nikkei moving the way it does is because it's a very thin market. And I say thin is you could see the bid and ask. It moves around a lot. You could sometimes see the bid and ask above the last filled price. You could see the bid and ask below the last filled price. It's not, it's volatile, but the volume, right? It has very little volume. It has a tight bid and ask, right? The spread's not that crazy. And I mean, it's just single digits usually. So low volume, you get crazy moves like this. You see there's a lot of gaps on the 5-minute charts, and it's a lot different of a market if you're used to the NASDAQ. I wouldn't recommend trading the Nikkei. Like I said, if you're new, if you're still trying to get a payout and pass and get to a point of consistency, I would recommend the ES.
Selling here.
Yeah, yep. Let's go to these next ones. I think that's about it. Matthew, where might take profit be on the Nikkei? I don't know. I'm not thinking about that trade. I'm trying not to think about that trade, but right
Doesn't
around
exist.
right around the upper 70s. What if crude retests the FVG? Do you know what FVG is? Yeah, I
Fair
think
value gap.
fair value app. Is there a way to be a little more sure it'll bull or bear?
Which fair value gap would be my question? On what time frame?
I don't know.
There's a yeah, I'm not sure with that one. If you could give us a price level, maybe we could help answer that question, but I'm not sure what time frame fair value gap you'd be talking about.
Okay. Yeah, let's move on to the next one. Why does gold feel so manipulated? I don't think I've won a gold trade in months.
It's just not trending right now. It's if you look at a daily chart in gold, um, we are. trading in a higher time frame range, right? What we saw in gold all last year was a one directional trending market, and it was a lot easier to trade. Over the past month and a half, it's been in a consolidation.
Yes. It's been a tough market lately. Over the past year though, there was some really great opportunities in gold. And that's when I was trading it. Now it's been kind of a mess, kind of like crude oil, to be honest. Would you recommend a newbie trade the Euro session into the New York session to catch possible easier, slower entries? Mm, I don't know, Coach Jay. I mean, if you're a new trader, I would say pick a time that fits your own schedule. I think it's more about you as the trader than it is the market, because if you're a new trader, you need to make sure that you have the time to trade and you're not forcing it, right? Because
100%.
for me, I know I was going to college and part-time job, and you can imagine the only time I had throughout the day was right now. And so the only time I could trade was now during slow markets. And so I found a way to trade this. I had a process. I got used to it. I got comfortable trading this time. And that's how I developed as a trader. For you, maybe it's different, right? Maybe you trade it during the morning, during the London session, or somewhere in between, depending on when your availability is. So whatever your availability is, you trade that time. I think that's my best recommendation. So that way you could get comfortable trading, you could get used to it, you could, develop a process. And then as you go through that, maybe you could, sometimes if you have some free time, trade it during the different sessions and then find out which session you are more profitable in and then stick to it.
I agree. Figure out what works for your schedule. I would also say stick with that time frame and don't try to figure out how to trade every single session, right? They're all going to be a little bit different, and if you're new, stick with one and make sure you give yourself some time off the charts to kind of review the information that you got from that session.
Yeah. Yeah, Coach T's good at telling us what time that we suck at trading. That's for sure. Here's a question I myself have been thinking of, and you could read that, Coach J, where it says regarding to entering a trade where your stop would normally be. Have you looked at splitting your entry half where you want to get in and half where your stop would be, and the same risk amount?
So that's kind of what we were doing today during fast markets, right? Where we said, the market is starting to trend, and we have a feeling, a pretty good feeling that the market is going to continue to the upside. But the problem is we missed the better trade locations. So we just decided to get into the market right now. On average, in the house account, our trades are maybe 5 contracts. Sometimes we can put on 10. I think we were both kind of comfortable building into a bigger position today. We just didn't get the great trade location. So what we did was, instead of putting on a full position at the high of this market, we said, let's put a one lot on. If it continues to go, then at least we have some exposure to the move that we're looking for. But we're not putting on the full position because of the potential for a pullback, right? Now, I don't want to trade this pullback because I'm looking to get in on the long side. And then where we had our stop was below 75, right? So the stop would have been here. The way I was looking at this, Dakota, was pretty much buy anything between our initial entry and the stop, right? Trying to build a position into these 22,000s as these levels hold. But I think it's a good idea, right? Sometimes when you try to find that perfect entry in the market, you're just never going to get in. But getting some skin in the game, seeing how the market responds once you're in it, once you're kind of in the flow of the market, I think helps to know whether or not you're in a good trade location or if you can build into that position. And it's not really adding to a loser, because I think adding to a loser would be if my max allocation was 5, I take all 5 up here and then I add as it pulls back, right? That's a different, I think you need to know what your full position size is, max allocation, and then go from there.
Yeah, and especially you have to have a plan, right? It's a process. And
Right.
if your process and how you're trading dictates that, where you could say like what we did in the New York session, and all the trolls came out after our first entry, which was pretty amusing. Where yeah, we bought what 20,030 or yeah, we bought near the highs, right?
Right.
20,030, and we just like one contract. Let's just throw one on. This market's grinding higher, and if we get a pullback, we'll add. We got the pullback. We added at 22,009, which was the low of basically that move, right? And then
Right.
we rallied, and like that is a good example. We had a plan going in. We add some here, and we could even possibly have maybe added two, right? Maybe there's a way you could develop processes. Hey, you get in one contract. My max allocation is 3 contracts. I'm going to get one in here now. And if we run to where my stop loss would be, I'm going to add 2. And that's my full position. But then you got to make sure you still have a stop somewhere and make sure it's still valid, right? Because the stop is important for, to validate your trade. And for me, what I'm going through right now, Coach Jay, is determining if I get in where my stop is, then where would my stop be, right? And then that begs the question, well, shouldn't I now get into where that stop is? And then and then you could just get in that cycle of
Never get in a trade.
and just, hey, you know what? I'm just going to never get in this trade because every single time I get in, that's where my stop is. And then my stop's a better entry, and so forth and so forth and so forth. So that is kind of what I'm going through right now. Is I need to understand my current process and saying, this is the trade. And then mark it. And then mark where I'd put my stop loss is. And then if we get to my stop loss and then I see a reaction there, then I get in. And then how do I manage my stop at that particular point? And so that's what I'm going through right now. I think we've seen a little bit of that on fast markets. I'm trying to do it live in front of everybody. And so you guys get to see me go through the good, the bad, and ugly. And so hopefully I'll be able to fine tune my trading in this particular account to where, yeah, I could develop a nice process where it says, this is the trade setup. Maybe I mark it on the chart, and then if we run where my stop is, and then I get like some type of 3-bar reversal or consolidation, I get in, and then I need to find a way to put my stop at the next, and it'd have to make sense. So that's what I'm currently going through, and maybe there is some type of solution, and you can imagine so many different ways to trade where you could get in one there on my normal setup, and then 1 or 2 where my stop is, maybe 1 in between, and then have a final stop. And it's for me, it's more about managing the money first, managing risk. Like, how can I manage risk while getting to that goal of getting in where my stop should be? And then how would I manage risk from that point? And then would the trade still be valid? And in what scenario should that be in, right? Because there's different scenarios where in no way would I want to be getting in at that point, right? So there's so many
The
different
market gets back down
aspects.
here. I don't want to be in. Yeah. You got to ask yourself that question, right? If I do get this pullback, is it still a valid trade to the long side if I'm looking to get long?
Yeah. On a trending day like today, heck yes, right? Where
Yes. Yeah. 100%.
we want to buy the dip, and if it runs stops, it's still very, very much a bull trend. And we had that conversation live on fast markets, right? Well, we're just having that conversation. We're like, is this really a trending market, or are we going to switch to a consolidating strategy? And I was just like, no, like, we're still up over 1%. This is not a consolidating day. Even
Right.
in the New York session, we rallied up, and sure enough, we broke out, and we had another leg higher into lunchtime. So that's one thing where you just kind of have to understand, like, as a quarterback, you need to read the field. You need to understand what your game plan is, what your process is, and what you're doing. Then you have to understand what the market's doing, like the defense, and understand how it's going to be reacting. Because if they're going to blitz on you and send every man at you, you're not going to run the ball, right? And so that's kind of what I felt this morning, where this market's rallying and it's trending up, and then I'm not going to play a consolidating strategy, even though it might feel like it at the time. And little details like that make a huge difference.
100%. We're getting some really good questions in the chat. You seeing any trade setups right now, Dakota?
No, I'm still looking at long the NASDAQ, but I think it's just going to be a thing for tomorrow, to be honest. We did get down to basically the middle of the opening range in the New York session. And we're seeing some nice buyers stepped in at those 920s.
Where we were looking, right? Kind of maybe a little bit lower in those lower 900s, but I think the market's looking in the same place.
Yeah, so here's the thing. If I was long right now in the NASDAQ, you can see my stop. Let me switch it to my charts. So if I was long right now, my stop loss is going to be below somewhere right there, right? So I'm going to wait and see if we can make a run to these 890s and then possibly get long. I don't want to leave a pending order overnight in the NASDAQ with what we've seen lately. So I'm okay not putting a buy limit there, because if we just randomly sell off 100 points, that buy limit's going to just crush the account. So yeah, this is where my stop loss would be. If I was long the NASDAQ right now, my stop loss would be at 891. I'm going to see if the market could sell off down to there.
This longs look decent here also. We got to pull back to the low of the opening range in the S&Ps. The tick, actually, right to the low of that opening range, pretty much. And we bounce from there. Looks decent.
Fair enough. I'm looking at these other markets. Yeah, I still like it's buy the dip. I think it's still to buy the dip. After that Trump tweet on Monday or Tuesday and talking about those tariffs, I thought that would have changed a lot of things in the market this week in particularly. And the market shook it off like it was nothing and ended up turning very positive. And we were down like 1.5%, and then we just rallied. So this market is very resilient right now. I'm going to get to a few more of these questions. Would you play a long breakout from the support level or after breakout? I'm not sure what you mean by that. A long breakout from the support level or after breakout? I'm not sure what the after breakout means. Maybe if you could rephrase that, please. Does location of your stop loss influence whether you take a trade or not? Many a time I hear you say, where do I put my stop? And eventually don't take a good setup. Yes, Desmond. I look at the risk first, and if I cannot manage my risk efficiently or effectively, then I just can't take the trade, even though I might like that setup a lot. And I know this happens a lot more on fast markets, Coach Jay, where I look for, like, say, for example, a 5-bar or 3-bar reversal on the 5-minute chart. And right, that candlestick is like 70 points. I might like that trade, but I won't take it because, according to my process, my stop loss needs to be below that previous candlestick. And there's no way I'm going to have my stop loss that wide.
Much risk.
I would wait, and if it gives me an opportunity to limit my risk, then I will. But I've missed a lot of good opportunities doing that. I've also missed a lot of bad losses doing the same thing. So it's give or take in anything you do.
Yeah, I agree with you. If the risk is too wide and I say, my stop has to go here, what I usually go to is, I could definitely get better trade location on this trade. And sometimes that means you might miss one, but I think that's okay.
Yeah, exactly. Everyone sees me miss trades all the time. Sometimes it's frustrating. I can get frustrated on missing a trade, but I try and not let that affect anything, right? You could see me. I missed that Nikkei trade, and we did basically hit 800. And it seems like every night I'm always looking for trades. I'm finding different opportunities. I miss them. And there's always going to be more. I mean, I look at 4 markets NASDAQ, crude oil, Nikkei, and gold. And there's never a shortage of opportunities, to be honest. There's actually exact
There's always going
opposite.
to be a trade.
There's
Yeah,
there's
there's too
too
many
many.
opportunities.
Yeah, and then it's just which ones do we take, and that's what we have to filter out. You've seen it. Big shout out. I mean, I don't know if you've seen it, Coach Jay. It's been all over the Twitterverse of that trader. He made over $300,000,
Insane.
and I just like, this dude's gambling, right? Like that's the first thing I think of when I hear those numbers. I'm like, this guy just put on 15 contract and YOLO'd all of his accounts. And I looked, and when he posted it on social media, he posted his trader dashboard stats, and he has over like 20 trading days consistent. And the one thing that we know when we review these stats, Jay, you could guess, how many number of trades do you think he takes on average? You might be mute.
Can you hear me now?
Yeah, I can hear you now.
Maybe 3.
Yeah, it was. I think he averaged like two trades a day. That's all you need.
Identifying the trend, getting in the market, and letting it do its work.
Exactly. Less than 5 trades for me. Today, I took 2 trades, and I ended up my day up, I don't know, something. I was in the green, but yeah, that is very important. Richard Harris, is this?
I haven't been on Twitter. I forgot my password, so trying to figure out how to log back in there.
You don't keep your password on a sticky note on your computer desk?
No. No, it's one of my niece or nephew's names. I just can't remember which one.
I am horrible with doing passwords too. I'm going through some more of these questions. If not, we could kind of just switch to, let's see. Maybe we just start reviewing statistics. Let's take a look.
Yeah, let's look at them. I think we got through most of the questions that we had.
Yeah, I think we did.
Yeah.
Jim Simmons posted that meme. That's a good one. That's kind of how it is, right? Here, I think I could share this one. I don't mind sharing this. Right there. Trading my practice account, trading my combine, or even someone would say XFA.
You're showing my screen, Dakota.
Oh yeah, here we go. Here this is. This. Don't tell me we all feel this, right? That's kind of how it feels whenever you're trading a practice account or account that doesn't matter. You're kind of on point, and you're reading the markets really good. And then when you're in an account that matters, like an XFA or a live, you struggle. So yeah, that made me laugh right there. It posted it. Literally how it feels. That's how it feels sometimes. Yeah, going through some of these. Let me know on one you want to see or pull up. I'll switch it back to your charts, Coach Jay. Let's see.
Just looking. I feel like I'm moving away from the gold chart because I'm trying to convince myself into a trade here, where it still looks like a short. So I am just scanning around to see if there's anything else moving, but not really seeing anything as far as a great trade opportunity right now. So going to remain patient. But let's see if we have any trade reports to go through.
Yeah, I'm going to look through some of these as well. The first week of December, maybe we go. Yeah, I'll take. While you go through and pick, I'm going to look at this one ending in 2016. Yeah, I'll hard it. There we go. Let's take a look at these, and then you can go ahead and pick one. Okay, so here's this trader. I've had these accounts, so I'm assuming that this trader is copy trading when they use plural, accounts plural, Only 3 red days so far. I've had a little bit of oversizing struggles, but I've taken a few payouts. So immediately, I love to hear that you've already taken a few payouts out of the market. That's one of the most important things, right? You're able to pay yourself for what you've put in, all of your work, your effort. You've been able to pay yourself. So that I like. It looks like that was definitely a payout. The $2,000. I mean, that's a nice payout, right? Going through this, yeah, here's this. Emotions in trading will happen. Understand them, embrace them, and use them to your advantage. How would you use your emotions to your advantage? Sometimes they could be helpful. I want to ask Coach T that question.
That's a good question. How can you use your emotions to your advantage if you
Yeah.
find that, because sometimes people say, trade without emotions, but we're human, so that's kind of hard to do. But if you find that your emotions hijack your trading decisions, then you can use them to your advantage by knowing, hey, if I'm overly emotional right now, the best thing to do is to sit out, right? Or if I'm kind of even keeled and I'm not feeling too high or too low, then this is the time that I need to focus on my process and execute. Um, I definitely don't think you want to be ignoring your emotions at all, because they're
Coach
going
T
to have an
doesn't
effect
feel
either way.
emotions. Yeah, Coach T doesn't feel emotions. He doesn't know what he's
None
talking
at
about.
all.
He has no idea what he's talking about. Yeah, I like that. That's interesting. That sparks a really good question. 1.86 profit factor. He's pretty just under a 1-to-1 risk reward. Trade win percentage 66. Really good. This is nice. Look at this consistency. And I know this trader says he's had an issue with oversizing, right? The way I view this, I mean, it doesn't look like oversizing to me because it's a consistent oversizing. Typically is you see it more sporadic, right? Big up day, big down day, big up, big, and very big days. But I do like this equity curve, right? And then you take a payout, and then I mean, maybe there was an oversize on these 3 days or on these 2 days where we had a nice up day of like a few $100s, and you sold off almost a pretty decent size. And then you're right back into it. Now maybe there's some emotions, right? We just talked about emotions. This, where you used in December, looks different than what we're seeing now. Okay, so there's 1, 2, 3 days. Do you see the P&L for those days and those gaps? See how that looks a
Yep.
lot different than when you started? So when you started, you was probably more conservative. You was probably different size. Now, correct me if I'm wrong, because I know you're here. There's a lot of these are just my assumptions. And then as you started to take the payout and get emotional, maybe you started to size up. But this looks a lot different than how it was. Let's see.
Definitely more trades now than in the beginning, right? If you look at that December, there aren't many days with double-digit trades. There are a few in there, but it seems like a lot more frequent now.
Okay.
Could be wrong on that, but
Um, yeah, I see 10 trades that day, 24, 20, but a lot hanging around 8, 8, 8, 8, 8. I mean, there's 5 days with 8 trades exactly. Interesting.
maybe the
And then
traders using that trade limit feature.
6, maybe. That'd be cool. I'm excited. I'd love to see a trader use exactly that trade limit feature. That'd be interesting. And then one trade. There's another 8, right? 8 trades. 5 trades on the losing days. And then we have 17, 7, 6. Not too dramatic. What about
Doing
size?
great
Is there
though.
sizing difference? Micros. I like to see micros. I don't.
The only non-micro trade I see is a yen trade. Everything else is micros. Now
Uh,
you could still over leverage with micros, right? If you trade 50 micros, then that's a lot. But
yeah.
we're not seeing that here. We're not really seeing that here.
Yeah, well, at first look, it's like what, 2, 3 micros, but then it looks like you've built into this position. This looks like 10 micros, right? 3, 6, 7, 8, 10 micros, and then your exit price is the same. So that's like 1 mini. 5 micros, 5 micros. So it looks like your sweet spot is There's a 10 micro trade. Interesting. I don't know. I wouldn't see this as oversizing. Oversizing is like, yeah, 2 minis, 5 minis, 6 minis, or like you said, 50 micros, 30 micros. But it could be oversizing for you, right? Just because it doesn't look like oversizing, it could be oversizing compared to the way you typically trade. So maybe size down and then get back at it. I do like, I'm looking at all this is a nice bell curve here on the trade counts. So you have most of the ones that are on the shorter side, it looks like are losses, meaning you're cutting your losses off. And then the majority right there in the sweet spot between 10 and 30 minutes are where your winners are. And then even basically the longer you hold it, the more profitable it is. I don't know why that 2 to 4 hour ones. There's only 5 trades, but half of those ones are losses. But anything that you hold up longer than 4 hours, man, those are the winners.
Yeah. And that is a function of trading with micros, right? You don't have that anxiety of large P&L swings or anything like that. You can let the trade work out. If you have a level, you can allow the market to trade to that level instead of trying to quickly secure your profits.
Yeah, that's the best point that's ever going to be made, and will always be made, is if you ever struggle with your emotions, you size down. Like, and I say this all the time, all the time. I probably should say it even more, is when traders see me like, oh, you're letting this pull back against you. Why'd you lose $5,000? It went 50 points against you or 30 points against you. Like, how do you feel if you did that with one micro? You could let it, right? You could let it run all night with one micro, because 50 points in a micro is what, $100. I
Focusing on the process.
Yeah, it's like I just lost $100. I lost 50 points, right? And then when you go to bed, you're gonna sleep with one micro on. If you have a stop loss, you're not gonna really care what happens, and that's kind of that's kind of what you need to get to, right? Is you just not try to get yourself to a point to where you, I don't want to say don't care, but yeah, you don't care about the money as much to let it affect your trades. So that's the importance of micros. I think that's it. That's all I could see so
Great
far.
report.
Yeah, this is a good report, and it looks like you've taken, I just see one payout. Unless I'm missing something else, it looks like just one payout. Right?
Looks like one payout. Yeah, it looks like one payout because there are some losing days in here.
Yeah.
It's a nice
But that's
payout though.
good.
And then to rebuild the balance after the payout, that's great.
Yeah, consistency, right? Consistency. Don't look at it as you have to get back up to 4,000. You shouldn't look at that. Just keep following the process. Keep taking payouts. Don't think of it that you need to make back the money you just took out. Richard Harris,
Trader
can you
just
let
said
us know what
1217
KAI
was a
is doing? I have no idea. Coach Jay, I get this all the time. I don't know why traders think I have inside information. I don't know any of that stuff. I don't know what any individual trader's doing. I don't have access to look up somebody's report. Just what you guys share with me. If you guys share me your statistics, I could review that. But yeah, I'm not able to see anything else outside of what you guys see already and what's shared on Topstep TV. Any other stats that you're seeing?
Yeah, actually here I just put a fire emoji on one of them. If you can bring that one up.
Yeah, there we go.
It's actually a trader who is in an XFA, but they're down on the account.
NASDAQ
See if we
starting
can
to bounce. Okay, here we go. Let's see. Make sure we have all the data. I think we do. Okay. What are you thinking of on this one? Go ahead.
So first question is, what size account is this?
I can
For
tell
me,
you this. Go ahead. Sorry.
but what I'm seeing, you have a pretty high win rate, almost a 70% win rate, but your average losses are almost 5 times what your average, 6 times what your average winner is, right? Average winner is $24. Average loss is 146. This is what happens with a lot of traders, right? Where you can't focus solely on, actually here, I just got the full data. So there's a little bit more, but yeah, still around the same, right? 70% win rate, your average wins, much smaller than your average losses. Win rate alone doesn't matter, right? If we have big losses that are taking out all of the smaller wins that we have. So with this trader, I'm trying to figure out exactly what's going on where that's the case. Is it one big trade? I see a 2-lot as soon as this XFA was opened, a 2-lot S&P trade. So I'm assuming this is a 50K account. And that's where the big loss came from. But a lot of inconsistency in size, right? There's traders trading micros at some points and then 2 minis, right? Going from 1 micro to 2 minis is 20x your trade size, right? That's a lot of added risk, and you're not going to see much consistency in your results with that differentiation, right? Dakota, your default trade size is a 5-lot. If you all of a sudden started trading a 50-lot, are you going to be able to trade your account the same exact way?
Right. I'm going through to see. That's what I was gonna say. That I think that's the issue, because you talk about average
100%.
win, average loss, and you if you have a loser on one of your bigger size trades, that's gonna screw up your statistics, right? So
Right.
unless you have like some type of process and be like, yeah, if this is an A plus setup, you're gonna increase size. But I don't think you should increase size that dramatic, right? That's a
Right.
very big change in size to go from 4 micros to 2 minis. That's like going from 4 micros to 20 micros, right? That's a huge change. That's what, 5x?
100%. Right. And what's happening is I don't know what your average hold times are normally, right? Well, you got about 10 minutes, right, on your average hold times. I'm wondering how that average hold time is skewed, right? Are you holding the trades in micros longer? And, as soon as you're seeing profit in the trades with the minis, just getting out of the trade, right? Because it's, again, we're sometimes 5x or 10x the size. So 5 or 10x the P&L swings as well, right? You might not be allowing yourself to hold on to good trades because that P&L number that you see swing in the account is just like, oh shit, if I did this with 2 micros, I'd have to wait, for 25 points in order to get that profit. I just got it in 2 points. I have to take this trade off, right?
Yeah.
So keep your size consistent for a while. Good thing is, this account, if it's a 50K account, you still have $1,000 in
Mm-hmm.
balance to trade before the max loss limit. And this account is salvageable, but I think you have to be a little bit more patient in trading the contract size that fits this account.
Yeah, this is a scalper for sure. You could see the profits are, um, but you could see like, yeah, on the ES, it's from like, this is one of the bigger losses, 917 to 908. But typically it's like oh 07 3/4 to oh 07 even, 4 3/4 to 4 1/4. I mean, we have 88 to 89 and a half, 94 to 95. So very extreme scalping. Like looking for like what, 4 to 10 ticks on this, which there's nothing wrong with that. But like you said, Coach Jay, when you do have one of the losses, that messes up your entire statistics on this. And it looks like a lot of your trades are less than 10 ticks on some of these. I mean, there's 8 ticks, and that was one of your bigger winners. Is that 8 ticks? On the positive note, look at this. This is something you don't see a lot. Journaling. We can't read the journal, but that is beyond important. That you don't see this very often. I like this. Look, one trade done for the day, journaled. Like amazing. Like
Yeah.
that is absolutely amazing. 5 trades done for the day, journaled. I mean, there's another one. 1 trade done for the day, journaled. This is what I want to see. So regardless of losing money or making money or whatever you are feeling in this express funded account, this is how you learn. This is how you become a better trader, by trading, not blowing your account in 2 days, taking your time, trading small, journaling, learning, gaining that experience. And if you're able to keep this account up and active for, say, 3 more months, and let's just say this is just a hypothetical, okay? So you keep this account for 3 more months and then you lose it. And you compare that to somebody who, trades very aggressive and they lose it in, say, 5 days. The person who keeps their account the longest gets the most experience in an XFA, because in XFA, you take a payout. You can be eligible to call up to live. That has a lot more pressure as closer to a live environment in terms of the emotions than just a combine or a demo account, a practice account. So the more you can do this, the more you can journal, the more you can trade small, the longer you can keep your accounts active, the better it will be in the long run. Because as soon as you start to figure it out, then I wouldn't be worried about this drawdown. Like this drawdown, in 2 years from now, you're not going to remember a single thing. You're not going to remember this. I mean, most likely, maybe this is your very first account and you will remember it, but odds are you're not going to remember this, right? Like, oh man, I got myself in a drawdown. The goal for us as traders and newer traders should be learning, becoming better, learning how to trade, creating good habits. So that way in 2 years from now, you keep those good habits and you're a much better trader. And then you're not thinking back, like, I don't want to say who cares, but in a few years from now,
if you're remembering the losses 2 years from now, they were definitely too big.
yes, that's, oh man, trust me, I do remember some losses that were just too big from my end. But yeah, it's more about the growth. It's more about learning. I don't remember any of my teachers' names in high school, maybe one or two, but you still learned. I still learned. If you lose, yeah, it's what do you call it? A double-edged sword. It's a power and a weakness on having short-term memory sometimes, Coach Jay.
Definitely. We got a question here from Connor. First week of December, we had a very choppy market without conviction on the S&P. What are some things that you look at that might suggest chop or indecision on the day? What are you looking at, Dakota, to say, hey, this is a choppy market?
First week. Oh man, this is the question, right? If we could figure out this question, we would be really great, huh? If we can decide, are we going to have a choppy day or are we going to have a good trading day? I think, I know the way you like to do it, Coach Jay. You were talking about using VWAP, right? And is a VWAP flat, opening range, and so forth. For me, it's more about price action, right? Like, how volatile are we getting? I talked a little bit about like an ATR. I know David Green talked a little bit about an ATR. ATR could be good and bad depending on how you use it. Like today, we seen a decent market this morning, right? There's a lot of chop and then we rallied. But then after that, it was still just chop, right? And comparing that from day to day to day, and I mean, I don't think there's a very consistent rule that I have found that will say today's choppy, don't trade. Or today's trending, trade a trending market. Today's consolidating or choppy, trade a consolidating strategy or that. I mean, look at this price action. This is on the 8th, January 8th. That was a mess, right? That could have been a great day for like Dobie, trade consolidating strategy. And then we take into consideration like a day like January 15th, right? Big trending day. Is there a chop indicator? I'm sure there's some way, but
I'm sure there's something, yeah.
But I look at price action, and I'm going to zoom into gold. Let's actually zoom into the 1 minute. So if the market is having clear and clean price action. It's not. Oh, I'm just trying to put the words together, Jay.
I get what you're saying. If there's not a lot of overlap in the markets,
Yeah.
I think you can kind of just see it, right?
Mm-hmm.
You get a feel for the markets if you're not seeing follow through on some of the moves. I think a great way, if you're not using any indicators, is just looking at the overlap in the candles, right? In the NASDAQ, for example, if you get a 40-point candle to the upside and then a 50-point candle to the downside, and they're two 1-minute candles, the market hasn't chosen a direction,
Yeah.
right?
Look at my chart, and you could see how are the wicks, right? Are there wicks on both ends? Are there a lot of wicks on the candlesticks?
Right.
Are the candlesticks like kind of barcoding and overlapping? And that's very messy, and that's very choppy and hard to trade. And then if we go back in time and let's take a look at, I don't know, a good, like a decent day, right? And we take a look at this one. So there's not as much. There's still some overlap, but we're getting more moves. Like there's decent sized moves. There's a lot more volatility. This one was, I don't know what day that one was. And then you can kind of see this is a lot cleaner price action, right? Where there's higher highs, higher lows. There's not as crazy as chop. Now, this is difficult to explain or go over. Yeah, that was that big sell-off during slow markets. Let's see. This is on a 1-minute chart. I want to kind of give a better example than that. 1-minute chart, there's a lot of chop, typically. So maybe, yeah, it's hard to explain, but I think I think traders get it. I mean, take a look at this day. There was not much chop on this day. There's a few areas that there was chop, but I mean there was for the most part decent moves, and that's kind of what I look for. Is this market moving? Is there opportunity? Is there volatility? And that's what I like. That's what I look for on days like that compared to days like today. Just overlap. I'm sure traders can explain it a lot better than I can. And like here is a good example. We got a little bit of both on this day. This was decent price action. It was consolidating, right? But there was decent price action where we were getting moves in the market. And then compare that to this. Man, that's ugly, right? That is very ugly. It's bar coding. At least this one's bar coding, but in a bigger range. And then we take the
20-point range in the NASDAQ is tough to try to make anything out of. But if we get a 60-point range, there's opportunity in that.
Yeah. And I'm continuing to look. It's hard. It's very hard for me to explain. Here's another one, right? There's a lot of decent moves. It's not consolidating, but we're kind of trending down. So we get a big move, pullback, big move, bigger pullback, decent move. And this was a nice, a nice day. But the question I think is going to revolve around is how can we identify it, right? I identify it by pattern recognition. Like the worst pattern I absolutely hate is the
megaphone.
The megaphone, yeah. I call it the expanding ranges, right? Where is it making higher lows and higher highs? Like this one, we're making lower highs, right? Lower highs, lower highs, lower lows, lower lows. Oh man, I just wrecked it. Oh yeah. So there we go. So this one is a nice trending market. And then when we look at a messy market, it's a mixed, right? Maybe we have both. Maybe we have higher lows and like lower highs and mix, megaphone pattern. Market's indecisive. Maybe there's a lot more wicks. And you know what, Coach Jay? I think the ES is much better at that compared to the NASDAQ because the ES is a lot more consistent, right?
Consistent. Respects levels a little bit more. Not going to run levels by 40 points before it eventually goes in your direction. Well, I like trading it.
Danielle is in the chat. Long
We got
time no
Danielle
see,
in the chat.
Danielle. It's been a while since you've joined us in slow markets. We're not, yeah, joined us in the chat, right?
Always great when Danielle's here.
I know the traders miss trying to get free stuff out
Another
of her.
trade.
Free
Oh,
stuff
yeah,
and
that too.
all that.
Danielle showed up. Time for giveaways.
I know.
I just got I put it in the in our Discord, Dakota.
Yeah.
Trade report. If you can bring this one up with 7 weeks of data. It's another good one. Another really good one.
7 weeks of data. Okay, I like it. Oh, interesting. Interesting. Is there any details or comments on it?
All they said was 7 weeks of data. 7 weeks of data. What I'm looking at is, a low win rate, right? This trader loses more trades than they win, but they keep their losses really small, right? $80 average losses. Trading micros. This is an account that I think gets looked at for bringing over to live. Now, there is one huge day on this account, which is the first day. Started off with a bang, made $4,200.
All right.
But then after that, it looks like, you slow down a little bit. You took 24 trades that day. I don't see many other days that are that big. It's like the Christmas present, like we talked about before, right? You get your new Christmas present and all you want to do is play with it all day. I got this new account. All I want to do is trade. But then this trader made profits and then slowed down, which is great.
Yeah, 2-to-1 risk reward. I like that.
Yep.
Curious on how much that first day impacts this. Let's dive into that. I'm hoping that these sell-offs have been profit or payouts.
Definitely are payouts here.
Yeah, they are payouts, right?
A couple losses in there, but definitely paying yourself.
Yeah, that's a payout. 50%. That's a payout. Look at this. Yeah, this is what I love to see. This is a great example, right? You pay out, you build the account back up. Pay out, building the account back up. That's what you want to see as a trader. Beautiful trade duration and win rate analysis, right? Nice bell curve here on the trade count. Skewed to the higher hold times. I like that, and that corresponds really nicely with your win rate, where the longer you hold it, typically the more profitable it is. Curious on this. You took 4 trades and only half of them were profitable when you held it longer than 4 hours. So not sure on that one. This is nice though. Longer you hold it, the more profitable that trade is. This is a beautiful example. Nice bell curve. Not so sporadic with the trading hold times. There's consistency there. And a nice win rate. Longer you hold, the more profitable it is. And here we go. Yeah, let's take a look.
See that skew in the trades? Only 22% longs. Most of these trades, 148 short trades, 43 long trades.
Yeah, average trade duration 44 minutes. Yeah, this trader likes to sell this market, and rightfully so during that period of time, right?
Really good trade.
Once again, everybody, we're going to continue to see this. Lots of great statistics have this same theme in common. How many trades are you taking a day? Not very many, right? This trader, you're not going to see 50 trades in a day. You're not going to see 20 plus trades a day every single day. It looks like 24 trades to start this off. Looks like all micros, lots of micros in here. Which makes sense with the hold times, right? Micros allows traders to hold it for a lot longer. So I like it. That makes sense. It looks like the first trades that this trader did take in here was very, very big, right? But you held it for over an hour, it looks like. And it was just a good, solid trade. 5 micros, $1,200. Here's another one. 5 micros, $1,300. So this wasn't one where somebody got this account and just jumped in full contract size. And that was a good day for this trader. And then 3 trades, finished it up. I like how this trader's using, looks like biggest loss is only $600, right?
Losing days are 300 bucks.
Yeah. Micros. Great example. Micros on everything, right? One trade, 5 micros, $200 done for the day. 2 trades, didn't trade some of the days. It's holiday, November. More of the same. And look, you don't have to win every day to make money. This is a good example. Look, what is this, 50-50 it looks like?
40% winning trade percentage. Just managing what that downside looks like so they can stay in the game. It's really great trading.
Yeah. Still, this is good. Nothing wrong with it. Micros, consistent, paying yourself, and
Keep doing it. Don't change it. Don't change anything.
Don't change anything. Yep. Don't change anything. This is definitely one where I wouldn't be surprised if this trader is going to get called up. I'm curious, is this just one account? Are you copy trading amongst 5, obviously, or what that situation is? I know the risk management team takes everything into consideration of like, what's your account balance at now? Is it at 2,000? Are you going to really get called up to live with 2,800? The answer can be yes, right? That's and I'd love to get a conversation with Mick on Topstep or Ben, because this is the question. And I know traders, they like to see social media stuff, and they like to see the big P&Ls, and they like to see the big balances. This is kind of sometimes all you need, right? A trader, you don't need to have hundreds of thousands of dollars in a live account to be consistent and profitable. You can go live with $5,000, for example, $4,000 here, and you could still trade consistently and continue to take payouts. I mean, look at this trader. You took 2 payouts, totaling probably more than what this account balance is. You could go open up your own personal account, trade it the same way you're trading this, and probably do pretty well. I've seen traders do it before. Everyone gets caught up on making tens of thousands of dollars a day, but this is all you need. This is really all you need as a trader.
Just as a public service announcement, if you get any friend requests in Discord from anyone that's a coach, it's probably not us. It's probably a scammer in Discord. So just ignore it, block and report the account. There was somebody going around as a fake Coach J profile, but then if you look at the actual name, it was Daddy D. I don't go by Daddy D. So if you get a message from him, just ignore it.
Daddy D. I get too many messages to reply to all of them as well. And I'm sure the coaches, like all the other coaches, are the same. I mean, especially whether it's on Discord, whether it's on Twitter or X, it's just, if we were to reply to every single comment, that would be a full-time job for all of us. And that's not something anybody should expect. So never expect that we're going to be messaging you guys first. It's going to be all through our live and through the channels in Discord, right? Yeah, Discord is full of scammers with fake profiles all the time.
Shout out to the Coach J chat in there. Traders showing up every day, holding each other accountable. But just ignore the DMs.
Yes. Wow, man, it's already up on time, Coach J.
That went pretty quick.
That went by really fast. Any last thing before we end it here?
Trade well, manage your risk. Remember, we have jobless claims out tomorrow. So you don't have to trade in that number. I do the same thing for every news event. Identify the high and the low of the print and see how the market trades around there. Trade well, manage your risk, and we will talk to you all soon.
All right. Same.
What about you, Dakota?
Thanks, everybody. I'm not on tomorrow. I'll be on for slow markets tomorrow night, and I will see everybody then. Thank you, Coach Jay. Appreciate it.
Later.